Hey, good morning, everybody. Welcome to today's training workshop. We got some good speakers coming up after me as well. But today I want to talk about strategies for day trading with order flow. And as we've seen the past week, the markets have been going bonkers. We're getting massive moves up and down in both directions, pretty quick. On when was it? Wednesday, Tuesday night into Wednesday, we had a 50-point move just in the S&Ps within the first 45 minutes of trading. And I'm going to talk about that move, and it's sort of how you could have used order flow to take advantage of moves like that, and not only take advantage of moves like that as they're occurring, but as they reach their apex and the market starts to turn and form a reversal. So in today's training, you're going to discover why order flow analysis gives you an edge over other traders by showing you data other traders don't see. I'm going to show you how order flow allows you to see actual strength and weakness in the buying and selling that's going on in the marketplace. And I'm going to give you actionable methods to analyze order flow that you can use immediately. Now, for those of you that are brand new to one of my presentations, just a very quick, brief summary of who I am. My name is Michael Valtos. I've been involved in the futures trading world for over 25 years. I literally started at the bottom of the industry. I started on the CME floor with Dean Witter Reynolds as a runner. And eventually I worked my way up. I left the trading floor when electronic trading started taking off. Then I joined eventually EDF Man, the big English trading company. It's been around for over 250 years. I'm a licensed Eurex trader. I got my license when I was at Commerzbank, the big German bank. After Commerzbank, I joined Cargill. I was head of futures trading at Cargill in Chicago, and they even sent me out to Singapore to set up a trading desk there when the exchange floor was closing. After my time at Cargill, I spent 8 years at JP Morgan as vice president of futures trading. And these are all trading jobs, right? It's not sitting in an office, telling people what to do or watching, going over Excel spreadsheets and things like that. No, it's actually on the trading system connected to the exchange. And after I left JP Morgan, I formed my own company, orderflows.com, where I'm an independent trader as well as software and education provider. We developed a software, an order flow software specifically for finding the nuances in the order flow, as opposed to just having software that formats the order flow so you could read it. We took it a step further and created basically a Swiss Army knife of trading tools based around order flow. And the reason why I'm telling you this is because the charts you're going to see in today's presentation are formed using my Orderflows Trader software. Now, however, right, if you're using another software that has a footprint chart, you can use what I'm teaching you today on your existing chart. But you're going to see how easily and quickly you can apply order flow analysis to your trading to make better, more informed trades, because that's what you want to do. Now, if you stay around to the end, I've got a special treat for you. I'm going to show you how to download a copy of my book, Trading Order Flow. I wrote this book after I left JP Morgan. I wanted to give back to the trading community. It's 150 pages long. You're not going to get, the hardcover that you see here. You're going to get the digital download, but it's really a great starting point for anybody that's interested in order flow and in trading in general. Now, again, like I said, we created the software to help making order flow analysis easy. And as you can see, what many people have said, the order flows trader software is very helpful because they can clearly see now what's happening in the markets, right? Another guy says, if you really want to trade properly and understand what on earth is happening in any markets, order flow is the path forward. And with Mike's experience and explanation, it clicks, right? And that's the whole point of doing these presentations, is to introduce you to new ideas, new ways to look at the market that probably you never thought of before. And what separates winning traders from losing traders is not having an edge. But really, what is an edge? Well, it's a piece of information that other traders don't have, or something they don't see happening in the market, right? Order flow gives you that edge because now you have the information other traders don't have. We're living in a world, an information age, and that's where you're going to get an edge. So you're going to be able to see things happening in the market that other traders don't see, such as, market sweeps or market imbalances, or markets getting weaker or markets getting stronger. Now, before I jump in, just a brief disclaimer, do understand that trading involves risk, right? You shouldn't be jumping into the markets unless you have risk capital, which is money that could be lost without jeopardizing your security or lifestyle, and only risk capital should be used for trading, right? I know some people, they like to jump in saying, oh, I got to start, I got to learn how to trade in the next 2 weeks, otherwise I could get a job. That's not how you want to approach trading, right? Approach trading, from a methodical standpoint, because if you become good at it, it can provide for you nicely. All right, so in order flow, there are three building blocks, and I want to go through the three building blocks, which is delta, point of control, and imbalances, and show you how you can apply them in everyday usage of the markets. Now, what delta is the difference, the net difference between aggressive buyers and aggressive sellers in a bar. Now, every bar has a delta, right? And oftentimes you're going to see it um, on the bottom. Some other software likes to put it on top or the bottom. I like to keep it neat and clean and just show it on the bottom. And what you're going to see is either a positive number or a negative number. If the number is positive, that means there were more aggressive buyers than aggressive sellers in the bar. If the delta was negative, you can see the first line here, the red area is telling me that it's a negative number, then there's more aggressive sellers than aggressive buyers in the bar. And generally, not always, generally as the market is rising, it's going to rise on more aggressive buying than aggressive selling. You're going to see positive delta, just as if a market is selling off, you're going to see negative deltas on the move down. Now, there's going to be times where the market spins around, like right here, right? The market just stopped right in this area. And this is important to know as a trader, what's going on in this market, right? Why are we stopping in here? Well, let's just break it down. This is from yesterday morning, just after the cash opened. And immediately there's a lot of selling coming in. You can see the strong negative deltas, minus 900, minus 500, minus 1,000, minus 300, minus 1,200, right? Very strong negative deltas. You're sort of expecting this market to continue selling off. Why? Because the aggressive sellers are in control based on the delta. Obviously, you got red candles, so the price action is down, but then the market just stops and goes sideways here, right? And then it rallies. All right. So, what can you take away from the delta? Well, I know I've got very strong selling, right? I see minus 1,000 in the delta, minus 1,200 in the delta. Now, this is an E-mini 1-minute chart, but then you don't see it anymore, right? You just see positive 163, negative 107, negative 291, negative 15. So now I know that, yes, I had very strong selling right off the bat. The selling is no longer there, right? But I don't necessarily see strong buying yet, right? I see small back and forth action. I see positive 163, I see negative 107, right? Then I see 291 negative, negative 15, which is very small. And then another bar with some strong selling, minus 700. Okay, so some selling is coming back in, but then it follows right back with another bar with positive delta of 126, followed again by negative delta of 392, small negative delta minus 96, then positive 28. So in this area, right, you're seeing relatively small deltas, except this one bar is plus of negative 772. But buying is more or less equal, right? Markets are always trying to find value, and in terms of value in the market, value is an area where people can transact, right? Where it's sort of a fair price in the market. Here, we're out of value, right? You can see the market is looking for value. You have more aggressive sellers than aggressive buyers. Then it found an area where people can transact and no one's really in control one way or the other, right? And people say, well, you got small volumes. No, the volumes are pretty decent, for that time. 5,000, 6,000, 6,000, 4,000, 6,000, 5,000. These are healthy bars. It's not putting in small deltas, with basically nobody in control on very light volume. No, there's legitimate volume going through here. And then the market starts to rally. And what's the clue of this market possibly starting to rally? Again, watching the deltas. You're getting in here with this negative delta, negative 96, which is relatively small, a small positive delta of 28, and then it jumps 450 positive, and then it jumps again 744. So now you know the aggressive buying is getting stronger and the market is starting to rally. That's your sign that this market is going to go up. Just as the market was going down on strong negative delta, once you start to string together some nice positive delta increases from 28 to 450, 450 to 744, that's a clue to you as a trader that the market is potentially going to go higher. Now, again, this is the day before, okay? Again, about a half hour after the cash market opened. This is 9 o'clock Chicago time, 9:05, 9:15. You notice the market it's going sideways here, right? But you got some nice positive deltas, 1,300, 697, 461, 332, 791, right? So you got some nice positive deltas. The market's going sideways. So you got to be wondering, why isn't this market rallying, right? Because sometimes the questions that you should be asking is, I have very bullish information, but the market is just not rallying. It's telling you that there's still some pressure on the market. Then you see the selling come in here, right? Minus 1,000 negative delta, minus 331, minus 191, minus 158. So while you have selling, strong selling came in this bar, this red bar here, as you were going down, 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 the selling is weakening. So you had some decent buying in here, okay? The market quite couldn't pull around, so it's telling you that the sign that this market could still be weak. And then you saw some strong selling, a little bit more selling, but even as you got more selling, it's getting weaker. It's minus 1,000, only minus 331, minus 191, minus 158, then a positive and a negative delta, right? Plus 470, minus 446, which sort of washes each other out. Then 374, 1,100, 789. Now you got the buying coming back in. Okay, so you had buying here, but the market tried to rally, then it just got slammed. Now you're seeing the buying come back in. Okay, the market did come off over these next three red bars, and if you're watching the just the price action, you're thinking, oh, we're going to go lower. But even though it's ticking down, you still have net aggressive buyers in the market. 71, 231, 754, right before it pops up. I mean, it doesn't look like much on these bars, even the price action has been crazy. But you're talking this one bar here is a 10-point bar, right? $500 move in 1 minute on this bar. But that the buying is coming back in here. And even though the market is just sort of drifting down slightly, it comes right back up and rallies, right? So even though you're seeing these three red bars, most people will see, oh, I got three red candles, I gotta get short. But if you're watching what's happening in the order flow, you see that actually no, there's net aggressive buying coming in here. That's probably your sign you want to get long. And think of it like this. Okay, it's like being stuck in the mud. You ever been in your car stuck in the mud, or I'm in Chicago. Sometimes I got stuck on my driveway on the ice and the snow. You spin the wheels around a lot, and you can't go anywhere, right? And that's a bit. Sometimes you see that in the delta, right? You got the big positive deltas, and you're thinking, this market should be rallying, and it's not, right? That's your sign that, hey, you know what? Maybe I better get out, put some traction, like put salt down on the road, or put a carpet under my wheels so I can get some traction. Because if this market, if you're seeing that aggressive buying and the market is not going higher, it's telling you that there's some, a bigger current underway that is, affecting why this market isn't going up. And if anything, you should think about potentially getting short or not taking that long. Okay. Now, Delta is going to help you with short-term moves as well. This is crude oil. Now, what do you see here, right? You see this market hit the swing high, right? But it's going up on negative delta, right? It's gone up -5, -61, -122. Okay, now it's sort of peaked out up here. So it's coming up here, and you're seeing selling come in. Well, if you come up to a swing high, you see selling come in. what do you expect the market to do? Well, it should fall over, and it did. Again, this is not a big monster move, but it's a move from, more or less 87.15 down to, 86.90, 25-cent move. And then it sort of hits the swing low, sort of going sideways, and then Delta starts to pick up 3.52, 147, and it pops up again another 25 cents in the crude. These are very quick trades, 3 minutes, 8 minutes here. And that's how Delta is going to help you. It's going to help you see where there's weakness happening in the market right here, or some hidden strength in the market right here. The 352, 147, -5, -61, -122. Sellers are starting to come into the market up here, just as buyers are coming into the market down here. I love this one. This is a beautiful example. This was on Tuesday, right? You have this market hit a swing high, starts coming down, sort of bottoms out, and then boom, it takes off. Now, think of it like a plane landing, right? Planes just don't come in, drop right down. They sort of come in, and drop off their load and then fly off. But as you're coming down in here, okay, you're seeing the delta, right? -31, -44, -175. So it's getting stronger here, okay? So you're expecting a move lower because these are negative deltas getting stronger. You come down in here, and again, you get the big negative delta, -372. At the low of the swing move, delta is only -70. Okay, so it's almost like you're coming down in here. Sellers put their foot on the gas, pushed it down, took their foot off the gas. Foot's off the gas already at this point. This goes from -372 to -70 to -27. So the sellers that were here earlier, they're gone already. All right, and you're seeing now you're seeing aggressive buying start to creep in, +5, +27, +47. So the selling was strong on the way down. Then you got a very strong one, but then it just got weaker, 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 then stronger, stronger, stronger. Right? So what do you expect the market to do? The selling's been removed from the market, and now you see the buying come in. That's why the market rallied. Okay, so again, crude oil. This was on Monday, right? We hit the swing high here, came off, rallied right back up towards that high, and then dropped off. Okay. Now, one thing, when markets take out highs or, recent highs, you expect the buying to get stronger, right? If you're going to take out a high, you want to do it on healthy volume that's increasing, right? That's getting stronger. Instead, we're coming back up towards that high, and you're seeing the delta in this bar is 126. This bar is only 31. This bar is 19. Okay, well, if we're going to take out this swing high here, you sort of want to see it in the opposite direction. You want to see a strong, a positive delta, a stronger positive delta, and even stronger positive delta as you take out those highs and you keep going higher. Instead, you're seeing the buying sort of dropping off. It's imagine a mountain, everyone, there's a big rush of people, running up the side of the hill to get to the top, but as people keep going higher, there's people dropping off, and that's what you're seeing here. You're seeing the buyers drop off, and then what happens? The sellers come in. You got a nice strong negative delta, -63, -104, -55, and then boom, -182. The strongest delta, positive or negative, on this whole page, this whole chart. So sellers are definitely in control by here, but really the sign was as the market was going up, 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 the buyers were getting less, less, less. So if buyers are getting less, less, less as the market's going up, the market's probably not going to go up much higher, and it didn't. Sellers came in, and the market dropped. So that's a basic way of using delta to analyze, sort of market strength, market weakness, the direction of the market. And again, if sometimes if you're not sure, which way the market's going, look at the delta. See who's in control. Is one side getting stronger? Is one side getting weaker? Because at the end of the day, you want to be on the side of strength, not necessarily on the side of weakness, right? You want to buy strength, sell weakness. Now, point of control is it's a very interesting tool. And it's fascinating because every bar has a point of control, right? And we're all familiar with how candlesticks form, right? Or bar charts form, right? Every bar, there's an open, there's a high, there's a low, there's a close. But really, that's just the surface. There's volume that's traded within the bar, right? You can't deny that there's volume traded in the bar, but not all prices are the same. That's like saying, well, I have a car and you have a car. They're the same because they're cars. Well, sometimes the cars are bigger, sometimes the cars are smaller. If these two cars met head on, who do you think is going to be the survivor in a crash? Well, the bigger car. Just as, volume in the market, small volume runs into big volume is going to win out. Okay. And again, that's sort of a trap that a lot of people fall into is trading all traded prices the same. Not all prices are traded the same. Some trade a lot of volume, some trade a little bit of volume. This is yesterday, right? This is crude oil, right? Market sold off. Okay. We had this nice little sell off here from, the 87.80 area down into the 87.30-ish area, then it just sort of went sideways. Okay. Now, what happened next was the market rallied, right? It rallied about 50 cents. And, as a trader, right, when you're facing this situation here, market selling off, looks like potentially could go sideways. It did. Is it going to rally or is it going to sell off? Okay. Because, eventually you're going to come out of this sideways action. And in yesterday's instant, it did rally, but you want clues, right? You want something clear that you could wrap your head around and understand that, hey, you know what? Yeah, this market looks like it's about to rally, and you're going to get it in the order flow. Specifically, the point of control, right? The point of control is the price level where the most volume traded. Okay, and you're seeing here, right? You're coming down, you hit this swing low here, you're getting 3 point of controls, more or less the same price. I mean, this one is one tick lower. Then point of controls start migrating higher, right? When you see volume migrate higher, move higher, right? Again, I just sort of explained it on the delta part, right? When your market is going up, right, you're going to do it on generally on healthy volume. Just as if a market is going down, you can do it on healthy volume. Now in the bar, there's volume. Okay, and if the price level with the most volume keeps going higher, it means more and more traders are transacting at higher prices. And if more people are transacting at higher prices, you expect the market to keep going up. Just as if a market is selling off, it's looking for areas where there's liquidity in the market where people can transact, right? And again, every bar has a point of control. And if you start seeing the point of controls higher in each bar, higher, 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 that's your sign. Now you don't have to wait for, 1, 2, 3, 4, 5, 6, 7, 8 bars of higher point of controls to start realizing, you know what, this market is starting to rally. When you're in a sideways market, you're generally going to see point of controls sort of aligned, right? Again, these are not perfectly aligned. There's one tick lower, but you got 2 out of 3 at the same price and the other one is one tick lower, and then you see point of control higher, higher, higher. That's your clue. This market could potentially have reached its bottom here or swing low and is starting to migrate higher. The volume is starting to migrate higher and you should start to expect higher prices. Okay, so somewhere to get in would be in this bar, right? And then what happens? The market jumps up. Even if you got in late here in this, after this bar, meaning you get in on this bar, you're still catching, a decent move, a 20-cent move there. I mean, ideally, you should be getting in somewhere in here or here, getting in, below 50 and riding it at least up into the 70s. Now, again, I talked about Wednesday's reopen, right? The 5 o'clock reopen. And it was just a big run up over 45 minutes, right? We opened up, around the 43.10-ish area. I think it was 08 or so. And then we just rallied basically straight line, straight 45-degree angle up, right up and all the way. I think it was up to 60. But what's the clearest sign? I'll talk about imbalances later. That's another clear sign. But you're seeing point of control, higher, 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 higher. Every point of control is coming in higher. Well, again, you don't need to wait till after 10 point of controls migrate higher. Once you start seeing it happen, higher, 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 that's your clue already. You don't have to, you see one, two, three, maybe four, go for it, right? You know that where you can hide behind are the previous point of controls, because volume is generally going to act as support or resistance, right? If the market's moving up, look for point of controls, which is your bar with, sorry, the price level with the most volume, is going to act as support. And you can see how it came right back within a tick here, with a tick here. It got through here by a couple ticks. Same price level, a couple ticks higher, one tick through it. Again, you can see how the point of controls are acting as support as this market keeps going up and up and up. So that was, that was an easy one. All right. Now here, right, market's selling off. This is Tuesday, around 10 in the morning in S&Ps. Lower point of controls, prices migrating lower, or volume rather, is migrating lower with price. The area where a lot of people can trade in each bar is getting subsequently lower, lower, lower. Then it hits a low. Now it starts turning, starts going back up, right? Now all of a sudden, instead of point of controls going lower, they're starting to go higher, higher, higher. And again, you could just, these two are more or less the same. You got to give it a little bit of leeway. You'd love it to be the exact same price or higher, but within a tick or two is fine. But already, you know that it shifted, right? Lowers, point of control is going lower on the way down. Now it's starting to go higher as the market starts creeping back up. And again, you can start seeing the deltas positive. That's another clue. But the deltas and point of controls are telling you now buying is coming to the market. People are looking to transact at higher prices. And then the market, again, puts in a nice, 15, 20 point rally within the next 10 minutes. Okay, now, if you're looking just at the point of controls, you're seeing a few things in here, right? Now, again, it's a little choppy in here, but then you're starting to see higher, higher, higher. Then it just sort of goes sideways, runs into this area where the point of controls are here, then sort of drifts back down and higher, higher, higher as the market goes back up, right? This is where they're appearing here. Now, again, when you start to see point of controls coming in at the same level over subsequent bars, in this case, 4 bars, that's a sign that the market is probably going sideways, right? Which it did. That's your sign to either cut losses or stay in the trade, depending on what your risk management is. Then you start to see it here, and then it starts migrating higher again. That's where you want to get in on the trade. Now, it was fascinating in the gold market on Wednesday morning, right? You had that big bonkers move in the gold, but what was the clue? Well, the point of controls moving higher, right? It looked like it was going to go higher here. You got one, two point of controls. This is your what do you call it? Patient 1 or patient 0, then 1, 2, then 0, 1, 2, 3 already. Now again, not all moves are going to be like this. Sometimes it can just go sideways, but at least you're going to be positioned to catch those moves like this. Now, again, this is yesterday in the S&Ps. You notice, come up here to a swing high, and this bar, it came right back to this level, right? Why didn't it go higher or come in a little bit lower? Well, that's because it came right back up to that point of control level. Now, we've done tests on this, and it's actually very effective. And I wish I could come up with a great reasoning for it. But what we found is when you have one bar as point of control, and then the next bar opens up far away from it, and then it comes right back to that specific point of control, and then moves away, go with it as it starts to move away. So you can see here, we opened up 2 points lower, rallied right back up to the point of control, and then had a nice sell-off, right? And again, it's an easy low risk trade because you're trading down here, 44.33. Your point of control is here at 35 and a quarter. You just put an offer up here at 35 and a quarter, a stop up here, 1 or 2 ticks higher. If it stops you out, it stops you out. If you get filled, great. You can catch a big move for, 10, 20 points, and you're just risking ticks, right? You're risking 2 or 3 ticks to catch, full points, which is really what you want to do. You want to be on the right side of the risk reward ratio. Now, again, something very similar, right? Market going back and forth, and this bar came right back to this level and then shot up. Well, why? That's where the point of control got within 1 tick through it, right? We opened up about 1.5 higher, came right down to it, overshot it by 1 tick, and reversed and went higher, right? So again, imagine you're just throwing a bid in here. Now, again, it has to open away from the point of control because a lot of times, the bars open and close around the previous bar's point of control, more or less. But when it opens away, comes back, tests it, and then moves away from it, that's your sign. That's your trade. Again, very similar. Why does the bar come right back to this level? Because that's where the point of control was. This was yesterday after the Fed announcement, right? Remember, you had the Fed announcement, market shot up, came back, it came off a little bit, shot back up, but then this bar came right to this level and then puked. Okay, well, why? That's where the point of control was here. That's where the volume was here, right? Volume, what people don't understand is volume acts as a magnet, right? Again, point of control is the level in the bar with the most volume. And it's the level where in that time period, if you're looking at a 1 minute chart, a 5 minute chart, where traders found a fair price. In other words, the value level in the bar. So hopefully you can see how easily using order flow point of control can enhance your trading. Okay, so the last thing I want to talk about is imbalances. Okay, and we were all familiar with the term imbalances, right? Markets move from balance to imbalance. And you could see here, again, this is on that move Tuesday night after the reopen, right? We shot up from, 43.08 all the way up to about 70. You're seeing the green bars, right? Then you're seeing the red bars. Well, you see one red bar, another red bar. You're not thinking that, oh, you know what, this market's going to fall over because you just had a 50-point rally, 60-point rally almost. And what you want to see clues in the market that this market is probably going to fall over. And as you're looking at the order flow, what are you seeing? Buying imbalances, that's the blue numbers in the bar versus the black. Blue means buying imbalances in the two-way auction. It hits the high, and then all of a sudden you see selling imbalances come in, right? It doesn't get any easier than that, right? Where are your buying imbalances now as you start moving down? You don't get many. I mean, this bar had 4, but it's being overrun by selling imbalances. So on the way up, you're seeing the buying imbalances. On the way down, you're seeing the selling imbalances. Okay. Now, when there's sideways market activity, oftentimes you're going to see both buying and selling balances. You're going to see both, and you're often going to see them in the same bar. But when they start to appear directionally in a bar, that's your sign to go with that move. Now I'm going to show you an easy way to see the imbalances shift, okay? Because I admit, sometimes I get lazy too. I don't want to analyze every single print that's going through in the order flow. I want an easier way. That's one of the reasons why we created the Orderflows Trader software. And what we do is, this is the same chart that I just showed you. We'll put a box around the bars that have multiple imbalances, not necessarily stacked imbalances, but 3 or more imbalances in a direction in a bar, right? If it's a red bar, it's got to have 3 or more selling imbalances. If it's a green up bar, it's going to have 3 or more buying imbalances. And again, if you're just looking here, you're not making heads or tails, but now all of a sudden you see the market makes sense. Oh, I just hit a swing high right here. Now I've got multiple selling imbalances coming in here and here, and the market just falls over, right? Again, it's keep it simple, right? Don't make trading so complex. This is crude oil, right? This is Monday, right? That nice move up from 82.40 all the way up to, 83, over $83. And what are you seeing in here? Multiple buying imbalances, multiple buying imbalances, multiple buying imbalances, multiple buying imbalances as the market's moving higher. Now, again, I mean, you could sort of read what's happening in the delta. Maybe point of controls are a bit mixed. You're getting some, migrating higher, migrating lower, migrating higher. But then when you start adding it together, you're seeing delta increase here, 27, 41, 66. You're seeing point of controls migrate higher. Then you see the bar with the multiple buying imbalances coming in. That's your sign. You should be long already, right? Again, it don't make trading more difficult than it needs to be. Now here you've got, sideways action, multiple buying imbalances. Okay, maybe you take a long, but then it's met 2 bars later with multiple selling imbalances, and the market falls over. So even though you maybe you turned bullish here, okay, but then the bearish information came into the market. And as a trader, you have to be able to make that jump from bullish to bearish if the order flow changes. And it did. It changed right here 2 bars later, and you caught a nice move down, right? So maybe you turned bullish here, but then bearish information came into the market. You got to take advantage of that. Don't get married to your position, right? It's another example. Came down into a swing low, start point of control start migrating higher, multiple buying imbalances in here, and the market started going back up. Multiple buying imbalances, multiple buying imbalances. So, multiple imbalances occur every trading day in pretty much every market, but you need a way to see them quickly so you can potentially trade them once you put them in context of the market. And everything you see should be taken in context of the market. Don't just go blindly buying every bar that's got multiple buying imbalances or selling every bar that's got multiple selling imbalances. Put it in context of the market. And again, that's where having software that's going to highlight this stuff to you is going to give you an edge over other traders. And the way I like to describe it is it's like having a metal detector so you can discover things no one else sees, right? In other words, you're going to see what's happening in the two-way auction that other traders are not seeing, and more importantly, they're not reacting to. So, over the last 40 minutes or so, hopefully you can agree that this has been time well spent, right? And again, I can't cover everything in a quick training session. I wish I could, but I can't. If you're interested more in order flow, you can always go to my YouTube channel. I've got several hundred videos up there. But I got a special offer, so you can get everything you need to know about order flow. And if you act fast, I'm gonna give you a very special deal. So you're gonna be excited to know that the Order Flow Trader software, which runs on NinjaTrader 8 and comes with a volume footprint chart with 17 pre-programmed order flow tools. Now, I only talked about one of them, the multiple imbalance tools, but we got tools for seeing market weakness. We got tools for seeing market sweeps. We got tools for seeing, price acceptance, price rejection, market exhaustion. A lot of different tools that are going to help you take your trading to a next level. And best of all, you don't need to load templates or anything like that. We set it up so you could just, once you install NinjaTrader, you just import and open up a chart and add the Orderflows Trader software to it, and your charts will look just like mine. And normally we sell it for $8.99, but you're not going to pay that today. Now, the best way I could describe it is it's really like taking my trading knowledge, what I've gained over, 25 years working at, top level investment banks, JP Morgan, Commerce Bank, trading firms, Cargill, EDF Man, even on the trading floor at the CME, and putting it into a program so you can see what, the institutional traders are doing in the market. But I realized though, having software is one thing. You still got to know how to use it. So I don't just give you software and send you on your way. I hate that. I buy software sometimes and there's literally no documentation on how to use it. And it's just sort of, treading water. Is this what I want to do? Is this how I'm supposed to use it? We give you a lot of education on how to read the order flow. So you're going to get access to my order flow trading course, which I sell for $297. You're going to get access to that for free. But more importantly, I want to take you on a higher level. I'll give you access to my order flow inner circle video series, which normally I sell for $497. And there's 56 videos on advanced order flow tips and analysis. I say tricks, but it's really ways to analyze the order flow that very few people know of. And you start adding all that up together, right? It's close to $1,700. Now, I realize it's one thing to learn from videos and books, but it takes discipline, it takes commitment. We've all been down this route. We've all bought courses, not just on trading, but maybe other things, and we never complete them. Maybe we watch the first couple of videos and just give up. And what I found to be very helpful is live training where you can ask questions. And for the last 3 years, I've been hosting every Tuesday night live user training sessions where I drive home what I saw in the order flow for the past week. You could ask questions, you can send me charts, I'll discuss them, on this training session. Now, the archives, I have an archive for this, so if you can't attend, you can always watch the replay. There's already 152 episodes, okay? And, there's people that want to sell you software, then charge you extra on how to use it. This is a place where if you have any questions for anything, you could just come in there, ask me the questions. And again, I talk about different forms of analysis, different ways you can use order flow than you probably thought possible. And you start adding all that together, you know, it looks expensive, over $1,800, but just for a one-time payment, $749, you can get all of that, right? So just go to orderflows.com/oft3 and it'll take you to this page. You just scroll down to the bottom. All right, you just scroll down on the side. You can see the buy button here. You just click on that, it takes you to PayPal. PayPal processes your payment. I don't get your credit card information. I don't want it. And then within, once the payment is processed, we'll send you all the details for the download, um, your license key, access to the courses, everything. So again, you just got to go to, excuse me, orderflows.com/oft3.html. I put the link in the chat there. And, as a special bonus, because Anna keeps having me back, which I appreciate, I'll give you access to the order flow playbook for free. Normally I sell this for $297, but in this playbook, right, it's a course on trading, but also I jump in deeper on order flow analysis, and I teach you 10 additional trade setups that you can look for in the market. So to get started, again, go to orderflows.com/oft3.html. I put the link in the chat. And you're going to get the Orderflows Trader software, which is normally valued at $899. You get to access the Orderflow trading course, which is $297. I sell this every day for $297. You're going to get the access to Inner Circle video series for $497. That's included, right? You can't get access to that any other way. You're going to get access to the weekly live group training. Again, people charge up to $200 a month for live training. You get it for free. I got people in there that have been using my software for 3 years that are coming in there still, right? It's great. And you get access to the order flow playbook, right? Again, normally it's $297. You can get it for free. So again, it's just one-time payment, right? There's no recurring payments. I'm not going to, hit you up on your credit card each month. Now, of course, you will have to pay your data fees and NinjaTrader fees if you're trading through NinjaTrader. But again, it's a great deal. And if you want to delve deeper into order flow, my book is available to download. Go to orderflows.com/book.html, enter your name, first, last name, and your email, then hit submit. Okay, and then it's going to take you to that next page where you can download the PDF. So you get started now. Just go to orderflows.com/oft3.html.
Good day, everybody. Thanks for joining me. I just finished my live trading sessions with my members. Members were join me 3 days a week, live room, such as this one exactly on GoToMeeting. And I took a short break, and I'm presenting for you. I will talk about higher probability trades with volume profile and market makers levels. Now, the previous presenter explained order flow, which I highly respect. Whatever I have designed, it's stemming from volume and order flow. And as you will notice, I pay high attention and high respect to the numbers, to the volume, to market makers levels. Okay, I design things that will make your life easier. It will make you see the support, the resistance, the targets, even your stop losses. About me, I'm Simon Jousef. I started this early 2000s, folks. I started this whole thing, and you can learn more about me by going to the website. Back in, let me go to this next level. But what I do from early 2000s, I started with forex, moved to futures. Not long after, I discovered a method that it was simple, but then it got complicated. Then I went back to simple, called ACE methodology: anticipate, confirm, execute. Okay, as you see it here, anticipate, confirm, execute. My website has a good information about me, including testimonials, performance, funding, my CFTC case. I had a case with the CFTC for over 4 years, which recently finished, last year. I'm glad it's over. A lot of misconceptions, a lot of misinformation on the online, but you can hear it from the horse's mouth. I have presented myself clearly on this, and also I have a video meeting with my all members about it, so it's all there for you to know. Furthermore, going back to the presentation, so that's about me. So back in early 2000s, as I mentioned, I developed a system, and I worked with order flow, which is bid and ask ladder. I developed many things that helped me understand the market, but it was never enough. It was a bit complicated for us. Okay, I moved on. Today, a kind of a slow start for the presentation, but today I'm not selling anything. I am not selling anything today because I offer 2 weeks trial. So for you to come to us, it's okay. Just email us. If you go to the website, traderinstitute.com, no, not this one. If you go to the traderinstitute.com, easily go to the main page or any page, you will see 2 weeks trial. It's very simple, folks. 2 weeks trial, you will get in and you will see me calling trades. You will see me holding a live trade room. You can ask questions as much as you want, and I will explain a little bit more about what we offer. So let's start with this. Make sure that you benefit from the 2 weeks trial. It's easy. Just email us. It's the steps. How to get it is on the website. I have a handout that I told Anna to share it with everybody. She can share it with you folks. You can look into it. The handout has information, the information that you need. Furthermore, if you go to the website, I have something for you to enjoy for free. It's education. Multiple videos for education, very important. You can ignore the long ones for this one maybe, and you will see how I take trades, how I call trades in the room. The one video I want you to pay attention to, very important, folks. It's not done by myself. It's done by a doctor called Dr. Kenneth Reed. And he actually, this is 2014, he presented to us, called Adult ADD and How It Manifests Itself in Traders. Now, unless you're getting married today, you have to watch this video. It has nothing to do with promoting for me, or it's something to do with you and how you look at trading, how you absorb the mistakes that you make, the good things that you've done. All of it is here. It is an eye opener, and I encourage everybody to watch it. And there are multiple other videos that you need to watch. For example, our indicators. Also, there's a video called Clarifying My Trade Calls on Telegram. All right. Moving forward, what do we offer? We offer live trade room for now, 3 days a week, Tuesday to Thursday, from 9 a.m. to 11 a.m. And that is designed to basically look at the charts. I just kept a few symbols for now because we have more. We have a lot of more currencies. And I will do my top-down analysis. I will say we have a gold long, and this is the area I'm looking for. And I will have, levels, share with you. For example, the pound, we called it long from the bottom. On the pound, we are long from the bottom, and euro the same. We are long from the bottom for now. And I will just do that, and I'll ask you to if you have any questions. So the room is designed for live trade calls. It's designed for your questions, anything you want. Also, during the room, I will give you signals, levels, market analysis, and that will be on the indices. Let's say the Nasdaq, the ES, the YM, the metals, gold. For example, today I called the gold twice. Both of them winners, small winners though, on crude, currencies, all on Telegram. And how does that work? You see this. First of all, you can just go and join this channel for free. It's on the website. And once you become a free member, a trial member with us, once you become a trial member with us, you can join all of them. We have a channel for indices, a channel for metals, currencies, and there's a channel for elite members. We basically chat and share ideas and signals and everything, right? As you see here. And we have oil and other things. For example, on oil, I gave them this. This is my most recent oil level. It's not a signal, it's not a trade signal. I told them oil, I'm waiting for it to go up to this level. And from there, if there's a confirmation, I want to take it short all the way to 79 level, 79.20 to be exact. Because you see this is coming from the ladder, from the order flow analysis. This is something that's hidden in the market. You don't see it unless you have the software, not the software, but the indicator that we offer. Okay, so this is an example. Metals, for example, gold. On January 25th, 2 days ago, 3 days ago, this is what I told everybody. Gold, and I called this trade. This was about 500-600 ticks move. I said gold is coming down from about 54 level, 53, all the way down to 1804. And I actually called it. I have it on here, right here. I have it here, timestamped and everything, right? And we took the trade. I exited yesterday right after the FOMC statement with 240 ticks. I think a little bit more than that, but then it continued to 1804 afterwards. So I offer this as well. Okay, so all the trade signals, heads up, we have a possibility long, we have a possibility short. So, and then I will say, this is my long, this is my short, and all of them start with finding the stop loss and then targets. Okay. Also, we offer full comprehensive education. All right, I'll show you. If you become a full member afterwards, you will get the full comprehensive education. For example, level 3. Level 3 talks about volume profile, how to read it, how to understand it, and it has multiple videos. Crash course on volume profile, advanced examples, level 2, for example. So this is a series of videos and things that I have done throughout the years. It will help you understand it, and it's not enough because you will have to join the room. You have me on Telegram. You ask questions. It's a process. It's not. I'm not going to give you the education and okay, go ahead, go. I don't want to deal with you anymore. No, you're with me for life, basically, which I will explain. Some of the members have been with me for 17, 18 years. All right, and our own indicators. And for me to explain the indicators, before I give you some more examples, I will explain the indicators so you'll understand. I prepared all indicators for just this presentation on one chart, 30-minute chart on gold. Now, the indicator that the previous presenter talked about was order flow. I don't use it, but from the order flow itself and from the depth of market and market makers levels, I have created a system, an indicator. It's a magnet, or I call it SAL, Simon's attraction levels. SAL indicator will give you, see those magenta lines? Will give you targets, will give you support and resistance. And it's not random, right? And it's, as I will show you in the next session or next slides and videos, I will show you how it works. And you can basically right click, go to chart setting. This is on Sierra charts. No, go to indicators or studies. They call them studies. Simon attraction level. I'm looking at 10 of them only here, but you can look up to 50. You can look up to 50 levels that you're interested in. I'm looking for just for example today, I'm looking at 10. So SAL indicator is very, very important. For example, I'm expecting the gold to bounce back up soon. This is the gold forex, and I have attention, and the gold is intending to go back, reversing back up, and the gold is reversing back up because this is the down is done, right? I told you from January 25th, I'm looking for the down. It's done. Now the gold is looking to go up to 1850. And it's not, I don't know when it's going to happen yet because I have to find the support, but it's going back up to 1850. This is not me, this is not you, this is out of my hand. This is something market makers have decided to do. It might go up halfway and then they might change their mind, and I will see these ones shifting. These are only 2 levels. They might be shifting elsewhere. Until then, it's intending to go up, right? Same thing with the NASDAQ. If you look at the NASDAQ long-term chart, if I look at the NASDAQ long-term chart one day, I see the NASDAQ going up to, for now, intending to go up to 14,800 level, right? Again, just an intention. And I need to find areas of support and resistance to take that trade. Now, it is very interesting. I will put it together. Just pay attention and be with me, please, because I have to explain the indicators. Second indicator, you see those blue lines on the side? For example, this one is foggy because it's 2 of them on top of each other. This is DRL, dynamic reversal level. DRL, and DRL is put on a 15-minute chart, 30-minute chart, 45-minute chart, 60-minute, 120-minute, 180 minutes, 240, and a daily. So dynamic reversal level is a very strong indicator. Of course, it comes with different colors. For the sake of this presentation, I put it all in blue, and I will show you how it works with the next move, because I will show you a video. And the next indicator is the power line indicators. You see these power lines here? These are very important levels. They will give you support, resistance, continuation, and breakouts. All right. However, the main indicator that I have is the volume profile indicator, which is right here. You see it, the volume profile indicator. This is the main indicator on the right hand side. You can sharpen the edges, you can smoothen the edges, as you see. Okay, you can make it smaller, make it bigger, right? Up to you. And it reads whatever you have in the market. So you want to read only a few weeks of data, that's what it's going to show you. Okay, and every level of this, it means something. For example, this area here is rejection, but I am cautious because it's been rejecting it multiple times in the past, so I will not not going to call it trade for now, although I see it rejecting. An area, for example, every color is a zone. Okay, we have continuation zones and we have rejection zones, and especially more evident on a smaller chart, for example, a 30-minute chart, right? Right. So that's very important. And when I mentioned rejection, you see how the market is rejecting it now. See how the market rejected it now from 1792, it went up immediately. And this is part of the scalping that I teach my members. Scalping is amazing with this strategy. Although in the room I do a lot of swings, because by the time I type the trade call on here, for example, on gold, the call is gone. Now, enough said. I know it is a bit boring unless you understand it, but let me go and understand what is how we trade, and I'll explain. Anticipate the trade, confirm, execute. So we anticipate a trade first, we confirm second, and then execute third. So anticipate, confirm, execute. I'll show you examples. How do we trade? How many contracts or how many instruments? I told you we do all the indices. We look at FX or currencies. We look at gold, silver, anything. But the main thing you have to understand, this is a three contract trade call. You can do 3 mini, 3 micros, 3 whatever. But to start with, you have to learn the method. You can change it to 2, to 1, to 5, to 6. It's up to you. But for me to teach you, it's important to do it with the way I do it, and then you can advance. 3 contracts, meaning I'm taking 3 contracts trade. First 2 contracts are out in the first target. And an example is this: if my first target is 15 ticks, right? I am making 30 ticks, for example, 30 ticks profit, because that's my first target. But the stop loss is established ahead of time. So you understand it's a free trade call every time I do it. Let me show you an example of something we've done, a call that I took yesterday. This is a video. This will explain to you exactly, and this is the live trade room. As you see, this is a video from yesterday from the live trade room itself, right? So, and you see the members here asking questions, chatting with me. I am looking for a long yesterday, around what time was it? Around maybe 10:35 or so. I'm looking for a long on the YM. You see the middle chart is the YM, right? And you see I have a line here. I'm anticipating a long on the YM from this line here. Now this line is an area, but right below the line, I noticed the volume profile is giving me the level. I noticed there's a DRL. You see the green DRL, 30-minute DRL. So I told everybody this video has audio too, but I'm just gonna show you. So I'm searching, and then I finally looked at this, and look at the green line here in the middle. I called it long. You see this? I'm zooming in. DRL is away. Watch the DRL. Watch the DRL. See, even we're talking about it in the room. I'm looking for confirmation. All right. So there's the DRL. Look at that. Boom. That is the trade call. Okay. And if you see me in a bit, you will see me calling it not only verbally, but I also typed it. You will see for yourself on the YM. The middle chart is the YM. And I was also doing analysis for NASDAQ for a member who was asking about. So there's the trade. All right. So watch me referring to first target. I told you we have first target on 2 contracts. What do you think my first target will be? Watch. I'm telling everybody this is my first target. Watch this. It came back down for a good entry as well. But my first target is the magenta line. See, even a member says he's in from 279. I was in from 85 level. But the magenta line, the first magenta line on top, you will see me referring to it. That is my first target. See that? That's my first target. So we're looking at about 30 to 40 ticks first target, depending on the entry. So if I'm taking minimum 30 ticks on this one, on the first two, I'm already made 60 ticks. And this target here is not random. This is a market maker's level attraction. This is the market is attracted to this very much. It's heavy level that the market was going to come to and touches it. And there it goes. This is the entry as I'm circling it to the members, and the target is there. And once the market takes the target, oh, furthermore, I moved now to the bigger chart. This is during the trade. I'm trying to find my final target. Watch on this chart. This is the bigger chart, the daily chart on the YM. Watch the bottom. I have a heavy volume on the bottom, which means the YM can come back down in the future. But for now, this is my target. You see this one? This is my target. You will see me referring to it during the session. Let's move forward. Now, I told everybody this is my target on the YM. I mark it. That's it. So now, once I mark it on one chart, it shows on all charts. That's how it is with this indicator that I have. Once you mark one line on one chart, it goes on all charts. So you see the upper black line or dark blue line, that's my final target on this YM. Again, there's nothing I pulled out of my pocket. And you notice the first target on this arrow, the magenta line was hit and gone, no longer available, so it's gone. So watch me looking at the final target. Okay, first target, I made 30 ticks. On 2, that is 60 ticks. Okay? Final target, let me see how much was the final target. Where is it? Just give me a second, folks. YM, 180 ticks runner. Okay, so let's move forward. And there's audio with this, and you will see me in this here. You see this? This is when I told you, not only I called it verbally, I called it also on the chat with members. See 10:40 a.m. I said YM possible long, so that's a head up. A minute after, YM looking at this price. I did not call it yet. And then I said YM stop at 34245. 34245 is just below this here. You see this? It's about 12 ticks below this DRL, dynamic reversal level. And then finally, I said I'm looking at 40. So I changed my stop loss to 5 ticks lower. And then finally, I called it at 85 or better at 1046. So from 1040 to 1046, I am trying to find confirmation. So 85 or better, first target, we grabbed it. And then I told them my final target is going to be here, 34,480. 34,480. Paying attention, everybody, please. So moving forward, I said, get out now. I exited 20 ticks earlier because I saw something, but it still ended up taking that target. Do you see the power of this? It's a very powerful method. This trade alone gave me, I think, 200, depending on everybody's entries and exits. For me, it was 240 ticks. Okay, very powerful, easy. And this is a scalp, folks. This is a scalp. This is not a swing trade. This is a scalp. If you wanna see some swing trades we got, I have it on website. We have multiple trades, but again, as I said, I don't offer anything today. I will offer you free 2 weeks trial. You need to join to understand. Let me end this. Done with this. And remember, while I was doing a presentation just now, I said gold has rejection here. It wasn't long ago, a few minutes ago. If you look at a small chart on gold, it's already gone from 92 to 94. You see? And it also gave you confirmation. You see the magenta line? But I am doing the presentation. There's nothing I can do about it, and members understand. I did the same thing with if you look at the pound, I told everybody I have a pound long, and I gave him just today, this morning, here on the FX channel. Pound, of course, target one is out already. We took target one, but here's the pound call. I made it. I gave it to everybody, right? So pound was long. Euro, the same thing. I called it long from the bottom. It's euro right now is only, it did go for like 20 ticks, but now it's only a 3-4 ticks. It's from the very bottom, the long that I called. Let's examine how this whole thing works. I'm looking at my here. Just for you, if you have questions, please hold off. I will answer your questions towards the end. I think I still have about, what, 17, 18? Yeah, I still have 20, under 18 minutes. So this is how this works. I told you SAL indicator, which is the market makers level, and volume profile give me the main two indicators, right? Give me everything I want. But of course, I have other indicators that help me out. One of them is simple indicators, a line I put on the chart. And once the market hits it, it gives me in my ear the name of that instrument, because I'm looking at 15, 20 different instruments. Once I hear the voice telling me the instrument, then I will switch to that. Maybe that's a level that I want to trade, right? That's one simple indicator that we have. But again, we're trading 3 contracts. Target 1 is for 2 contracts. All right, and that's how it works. Let's say you're trading. Don't take anything personal. So whatever I'm saying is general. Let's say you are trading Fibonacci, right? And market comes back down, 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 down. You're looking for a long because, maybe because it was going up initially, right? And now you're looking for a long as a retracement, right? So let's say you're looking for a long. You want a retracement, and you would say, okay, I have a level here for a long, and I have a level here for a long, and I have a level here for a long, and all of them are Fibonacci retracements. What to do? Comes here, you take the trade, stops you out, comes back here, you take the trade again, stops you out, comes back here, you take it long, you say, okay, just took me out twice, let me take it up again. Hopefully it will hold, right? Hopefully it will hold. It comes back up, you take it from here, it goes up, you're excited, and then comes back down, takes you out again. Now you're done. You don't want to trade anymore. First of all, you don't know where your stop loss is. You have no idea where your stop loss is. In general, I'm talking. You do random 30 tick stop, for example, or 20 tick stop. You don't know, you don't have confirmations for these trades. You don't know what's going on, right? So now let me show you the way the volume profile and my SAL indicator will help you. First of all, the market is going long, going up, because you have a major level for SAL, for example, here. As I showed you on gold, for example, is going to 1850. Gold is going to 1850. That's how I see it, at least until for now. Yeah, it might change, but it's going to be a big factor for me. So, and then it starts to come back down. You're looking for a long. However, the volume profile I showed you, the volume profile, this on the side, on the right hand side, This gives you, as I said, continuation zones versus versus rejection zones. So we will have a continuation zone that the market built in the past, okay, continuation zone, followed by another continuation zone, but in between you have a rejection zone. This rejection zone could be big, could be small. I'll give you examples. Same on gold, 120-minute chart. You see there's a rejection level here on gold, because in between there is a zone that is continuation. So this gold long can touch 96 as well. Could. But for me, if it comes back down, hold on, sorry, if it comes back down again, I don't have another entry because this whole area is continuation. So I don't have any rejection here. Maybe there's another rejection here. And then if I take it, my stop loss has to be here. So my point is rejections sometimes are wide. So for example, this area rejection is wide. And for a scalp, it's not worth it. This is not worth it for a scalp, for a small scalp. If it's a swing, yes, it's okay. So that's my idea behind rejection. So sometimes rejection is big, sometimes is small, which is the smaller the better. But in any case, I don't touch any trade if I don't know my stop loss. Let's go back to the picture. Where is it? Right here. Right here. So going back, you're looking for Fibonacci levels. I'm not. I'm looking for my volume profile. The market comes back down, and you had a trade here, remember? Now, does it make sense? This is a continuation zone. Does this make sense to get in the middle of it? No. You will let it go. Now you saved yourself some losses. Now it comes back down here. You grabbed it. It was 50% retracement. I didn't care about it because it's still in the continuation zone. Finally, you have a rejection here. This area. So it comes back down, and now you have the long. Remember, we're talking about anticipate. So I am anticipating a long towards this line. And I'm anticipating a level here to reject it. Anticipate. What's next, folks? Confirm. Once the market comes here, you have a couple of ways to confirm. And if they combine together, that's even more awesome. Why? First of all, the sell indicator that I showed you, if you have a smaller chart, it will start showing up here. It will start firing up here. Remember the previous presenter talked about the bid and ask ladder, the order flow, and how the market. That's what it is. That's what this is a bit stronger because it's coming from market depth. It doesn't come from bid and ask ladder. So you will have sell indicator showing up indicating interest. Second, you have the DRL indicator that I showed you, how that YM gave me 240 ticks coming from the DRL. Also, you have power lines. Remember the power line indicators that I showed you? It could be here. That's another one. The volume profile itself, it will act up. So you have multiple levels, multiple ways of confirming the trade before you take it. Now, most importantly, so anticipate, confirm. Most importantly now, execution. What I mean by execution, where is your stop loss sitting with this trade? I'll ask you a question. Is it going to be sitting at the green level or at the blue level? Blue is completely random. Once the market comes back down a little bit below the entrance of the next volume profile level, it's going to continue all the way down. So if the green is taken, the blue is taken too. So why would I risk 50 ticks while I can risk only 15 or 12 or 10 ticks? Make sense? Absolutely. So now even my stop loss is not random. Everything is um, confirmed ahead of time. So that's your anticipate, confirm, execute. I've been using this method, folks, from day one I started my trading education and trading style, right? My confirmation was different, was based on different instruments, but still stemming from volume, stemming from the bid and ask ladder, etc. But now it's completely easier. So now market goes up in favor. Do you have another sell indicator here that maybe I showed you on the YM video how I took my first target? You grabbed your first target and then slowly goes up. Of course, stop loss cannot be moved randomly. I also move my stop loss with specific numbers that I hit. So if we hit somewhere here that I see no chance for the market to come back down more, I will move my stop loss. And then we call them smart stops, folks. Smart stops. And do me a favor, if you come to the trial, attend the live sessions. You have 3 hours a week. It's 2 weeks, 3 hours a day for 3 days. And then you have also here on Telegram. You can seriously, you can text me, like PM me in person. Talk to me in person, right? Like, for example, members talk to me in person and ask me questions. You will have that ability to talk to me in person, to ask me questions if the 2 hours during the live trade room are not enough, right? And the trades can come anytime in the day. I will just give you a heads up, right? My day starts with the top-down analysis, right? And then once I do my top-down analysis on the market, for example, today, uh, um, what today? I mean, I didn't have anything on indices. Mostly was on currencies today and metals. But yesterday was all on indices. See, I start my day with top-down analysis, videos, sorry, pictures, and tell them my levels. Everything is there. Today I have 2 trades on the currencies, both of them so far winning, right? Just to let you know, just a recap, I look at swing trades mostly. So, for example, a trade call on Nasdaq that could give me 500 ticks. That's only one call. So if I tell you on my website, you will see something like this. You will see here. Where's the website here? You will see 1,000 ticks every month. Folks, I'm not exaggerating. I'm really not exaggerating, because so far this month I'm up 3,000, over 3,000 ticks. A couple of trades on the Nasdaq will give you 1,000 ticks, because I look for bigger moves. And just to make sure you understand that I don't take random trades every time. So far this month, today is the 27th of January, I called 35 trades only. That is an average of 2 trades per trading day, because we have weekends. 2 trades a day only. Meanwhile, I will teach you how to scalp 50 trades a day. There's a system I told you, and I showed you how, I showed an example for the YM trade. Euro call this morning. I called it from this line. See, it's going up. It's about to hit first target. You see the euro call. Pound call. I called it this morning from this line. It's going up. As you see, we got first target on that. Let me see the Nasdaq now. What do we have? And I will explain a little bit more before I have 5 minutes left. Going to the website, let's see what I have. I don't have anything on Nasdaq, but for example, ES has big attractions to this level now. See this magenta line here? This is a big attraction on ES. I told you on CL is coming back down to 79.20. Gold is going up to 1850, right? So that's all That's all ahead of you, in front of you. You can see it. I don't have anything else other than on the website. Please pay attention to the trial. It's a free trial. Don't miss it. And now I'm open for questions. David. Hey, David. Yes, I am in your free trial. The clarity of the trade calls, both verbally and Telegram. And thank you so much. Yes, I noticed you benefited from a couple of them. Great. How long does it take to learn the system and perfect it? It depends. If you ask questions and if you're dedicated, 2 weeks. But it takes practice, right? One more thing, of course. After my trial, I want to sign up. Do you guys offer? Yes, we offer payment plans, but I don't deal with that. You talk to JR. That's okay, though. You can talk to me directly, too. There's a link to a handbook. Yes, you can get it all. Let me see if I can just post it here, too. It's handout to everybody here. Sent to all. That's not for me. Okay. So I am done. I don't want to keep the other presenter. But folks, if you want to join, please go to the website. There are multiple uh, pages and free videos that you need to watch, including our YouTube channel. I posted very nice videos on this, so pay attention to that too. Other than that, any final questions, please ask. Thanks, Edwin. I'm still looking for that gold long, Edwin, but not anymore. I grabbed it twice today, both of them winning trades. I'm looking at another level lower.
Hi, everybody. Hello, hello, hello. How's everybody doing today? Hello. Can you guys could just answer here in the chat room, right? In the question box. Let me know, where are you guys all from? Where are you guys all from? I'd like to know. Hi, hello. Where are you guys from? Where are you guys joining us today? I see that there's quite a lot of people in the room, so I know that you guys are there. I'd love to hear a hello or hey, I'm from here, I'm from there, from Atlanta. Very cool. Italy, nice. From VA, that's Virginia, right? And cold Pittsburgh. I don't know if you were in my other summit, but I was just saying that Pittsburgh was the last destination we went to before COVID hit and we were all shut down. I remember I actually really liked Pittsburgh. It was really pretty there. But we were there. It wasn't cold. I don't remember when. I think it was, I don't remember when. Toronto, Kenya. Very cool. What time is it in Kenya right now? Is it morning, evening? Pittsburgh is. It's an adorable, beautiful, really small but cute city. I enjoyed it. Artistic, very artsy. Okay, guys. So what do you think of this week, huh? What a roller coaster, right? I mean, what a crazy week. What were they saying? That Monday was as bad as March 2020. I actually loved March 2020 complete collapse, because if you had any money, that was the time to go in and buy whatever you possibly can, because it was bargain prices. I mean, it was crazy, 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 crazy. So now, I mean, things are starting to come back again and whatnot. But yeah, it was, this week has definitely been a roller coaster, super volatile. I mean, it's been a fantastic week overall. I was just like scrimping to get whatever cash on hand I had to just bring it into the market. But anyways, so today I want to talk about the breakout trade, because what is a breakout trade? It is, I think, probably one of the most powerful trades that we have going on. But if you guys don't know what to look for in the breakout trade, it could be really hard to find and spot and get in on it, right? So I want to talk about that today. Before we get in, I want to do a quick intro. This is me, Marina, the trader chick. And what we're going to be covering today is understanding market movements, indicators, because indicators do help, how to identify and profit from the breakout trade, and also scalping. I am a big time scalper for my trading. And I love to talk about scalping. I don't know how many people are actually into scalping, but it's something that's really should be looked into because it could bring you a lot of profits with a lot less stress. So official intro time. This is me. I am Marina, the trader chick. I live in Antigua, Guatemala. I'm an expat living here. I've been here for over 13 years already. These are my two boys. And before I became a day trader, I was actually a fitness instructor. And the reason why I bring this up, and also a travel writer, and the main reason why I bring this up is because a lot of people think you need to be coming from some sort of a background for trading, right? You need to have a financial background, a math background, all these other things. But in reality, anybody, and that's the beauty of it, can become a day trader. So I'm also trilingual. And the main reason why I bring up the fact that I'm trilingual is I don't know if anybody else in the room has learned a new language later on in life, like in their 20s and older. It's a whole process, right? Like I was born in the Soviet Union, so I'm a refugee from the Soviet Union, and so Russian is my mother tongue, but I was raised in the US and I learned English from a very young age. It was just completely natural, right? The process to learning English just became completely natural. I didn't even remember learning it. But Spanish, because now I've been living in Central America for almost 20 years. We lived in Costa Rica before we moved to Guatemala. I learned Spanish in my late 20s. And when you learn a language in your later years, it's a whole process. You have to, say each word in your head, translate it, get it out. Then the person who's with you, should be a patient person, will then respond back, wait for you to translate in your head. So it's this whole thing. But then one day you just wake up, if you commit enough and if you dedicate yourself, you wake up and you just start speaking the language, right? And I just start speaking Spanish. And when I began trading with the markets, I mean, I really struggled in the beginning. The first couple of years were really, really difficult for me. It was, hard, and then something shifted in my mind. I started to see that the market it speaks to us. It actually speaks to us. And once we start to understand what it says, we are able to work with it much, much easier. And that's exactly what I think I got that because of understanding how to learn a new language in my later years. And that's what I want to show you guys today. There are some basics that you can apply pretty much right away to understanding that language, and anybody could do it from any instrument. And the cool thing about day trading is that we could do it from anywhere, right? Anywhere. Before COVID struck, we were traveling 3 to 4 months out of the year. So I use one laptop. That's all I use, and one chart, and we could do it from anywhere. And that's the beauty of day trading. And also, I have been featured on a lot of different summits and expos. And again, before COVID, I used to do a lot of live ones, especially with Traders Expo and Money Show. Okay, so today what we're going to start by learning 4 basic strategies. So I call it it's literally the market is talking to us, right? So I want us to understand how to read these 4 basic strategies, and anybody can do this, right? It's literally like when you get in your car, you know where your brakes are, your steering wheel, the rear view mirror, the gear shifts. It's systematic to you, right? But actually it's a language, right? We have to understand it and learn it, and it becomes very automatic. And that's similar to what the market could do for us, right? So before I jump into this presentation, I have the worksheet that goes along with it. It's completely free. You can get it right now. And because Anna's going to be sending you the replays, you can then go over it in a slower pace and really understand and implement it to your own trading. I call it my own cheat sheet that I use for my own trading. So go here right now, making makingofadaytrader.com. You could go and get it right here, right now. Makingofadaytrader.com. Makingofadaytrader.com. All right, guys, let's do it. Let's get back to the basics to build this foundation, right? Because everything starts from the basics, and that's the beauty of it. Sometimes we overlook the basics. I actually always say that the majority of academies and schools and training programs, what they do is they teach you how to put in windows before you even put in your walls, right? And the walls is the foundation of your homes. So that's what we need to focus on, is those walls. Hang on a second, my dog is doing crazy sounds. I don't know why, but okay. So what are the basics of trading? First and foremost, if you want to be a day trader or a swing trader, you need to have a platform. You cannot do any of this without a platform. It's not going to happen, right? You cannot be a Formula One driver driving in a minivan. It's foolish, right? So you need to have a good, strong software platforms. There are so many out there. Some of them are free that are attached to your broker. Some of them you need to pay for. It doesn't matter. You need to choose the one that works best for you. And they usually come with universal indicators and feed, right? And the movement. So it's really important for you guys to be able to have that from the start. I personally use only two indicators. I use EMA lines and the MACDs. And again, get my cheat sheet, makingofadaytrader.com, because everything we're going to be learning in this presentation, you can apply to it on your own charts. It does not have to be on any specific platform that, but one that you use. Okay, so market movement. It is, we understand that there are, upwards trends, downward trends, and we logistically understand that there is a sideways trend, right? However, the sideways trend, or whatever you want to call it, indecision area, the chop, consolidation area, sideways movement, this is where I call it the trader's worst enemy, because it is literally where the majority of our profits of the day and even more get lost, right? Because this is an area where it's uncertainty. There is no momentum. And a lot of traders can't spot it in time. So it's really important to understand when to spot it so that we could stay out of it, right? So this is what it looks like. We have the downward trend, upward trend, and then we have the consolidation area, right? So an upward trend is pretty easy to understand. Each pivot is higher than the next, right? It's called the bull market going up. It's also where you're going to be taking your buy when you're going long. What does that mean? It means that you're entering at a lower price point, exiting at a higher price point. That is going long, right? That's what it's about. You're buying into it. Then we have the downward trend. And if you are a professional day trader, we do not care if the market goes up or if the market is going down. Hold on a second. The market is going down, right? Because we could literally probably make more money going down than going up sometimes. I mean, Monday was an incredible day when the market was totally collapsing. Okay, so what is a downward trend? Is when each pivot is lower than the other pivot. Okay, you are going in for a short. That means you are entering the market at a higher price point, exiting the market at a lower price point. One second. Okay, so we're entering at a higher price point, exiting at a lower price point, and the profit in between is what we are looking for. So you really want to focus and really know how to enter markets when they are going the opposite direction to short, because shorting can be so profitable and so much fun, right? This is when you're shorting the market. Bear markets, when they're going down, don't think of them, oh my God, the market is going down, I'm going to stay, oh no, all these people are losing money. Nobody cares what you're doing. Why would you care about others? If it's technically and with a technical analysis correct, this is when you enter the market. Okay, then we also have the immediate momentums, meaning that we have a momentum moving in one direction. The trend is moving in one direction, but sometimes we could have a deeper correction, a deeper retracement, which turns it into its own trend. And you could really monetize on these, especially if you're scalping, going in for smaller shorter time frames and profits. Okay, so it's really great, like target profits. So let's talk about consolidation areas and transition areas. Like I said before, I call it the trader's worst enemy. And once we understand how to spot them, we can avoid them. And when you avoid them, I can guarantee you right now that the majority of the money that you guys are losing is lost in these areas. That is a known fact. You should be able to actually go and look in your traders journals where you're back testing all of your trades and understand that this is where the majority of your money gets lost. And if you're not back testing, then you need to stop whatever you are doing and start to back test, because you cannot become a successful trader if you're just winging it. It does not work like that. Trading is all about the numbers, and it's all about understanding where you are making more profits than losses, right? And one thing when I started to recognize is the majority of my losses were happening in these areas, and then I started to learn them and really understand how that works. So this is what a consolidation market looks like. It's when it's going in between two areas. Okay, this is that consolidation area. You're moving up and all of a sudden it's flat. Do you really want to be putting your money in where it's so indecisive and completely uncertain? Just think of it, guys. How hard are you working for the money that you have in the first place? I don't care where you're working. You could be trading. You could be having a job. Most likely having, a lot of people have jobs that they dislike, and that's why they want to go into trading, or your retirement money. Do you really want to be putting that money into a place where the probability of it being a strong market continuing in that direction rather than you guessing is a good idea? Trust me, it's not a good idea. You want to be entering markets where the confirmation and the probabilities of you continuing in that direction are high, at least 80 to 85%, correct? That's where you want to be. So this is what those consolidation areas look like. You could have small ones just the same, and if it's a deeper retracement, you could be stopped out. So you want to be sitting in a place where there's movement, there's momentum, there is absolute confirmation, okay? And this is what these areas look like. All right, this is that market. It's a sideways market. It is a killer. So now let's talk about how to spot it, how to completely avoid it, how to be prepared with it. So the market respects areas, right? It sees areas, it respects areas, and we as the individual trader, the retail traders, we need to respect it as well. So what are these areas? They are the support and resistance areas. What I like to call support and resistance areas the safety belt, or the safety equipment for day traders, right? Think of Formula One drivers, right? I say this a lot. Formula One drivers, it is a known fact that 25% of the Formula One drivers during racing season either have a fatality or a really serious accident. So would you ever see a Formula One driver enter their car without a helmet, without their fireproof uniform, and once they're in the car without buckling in? Absolutely not. It's ludicrous, right? Like they would never even consider that because they need to be protected. Trading, 95% of people fail. What does that mean? They crash, right? They crash, 95%. So why is it that we are still avoiding things that could completely save ourselves easily? And those things are support and resistance areas. Because when you're seeing these areas, you're seeing where the market is respecting, either hitting in the ceiling or hitting on the bottom here. We know that we need to not be in this market. We need to wait until it breaks through, either going upward or going downward, right? Like that is just logistics. Yet so many people don't do this, right? You need to understand where these support and resistance areas are. You need to understand them. You need to draw them in. That's another thing, guys. Good charting platforms, they give you free drawing tools. So you cannot put in a mental resistance area or a mental support area. It's as silly as putting in a mental risk management, right? I mean, they do not work. So you need to draw these in because you need to know where they're at, because the market revisits them. So what is a resistance area? A resistance area is literally the ceiling of the market. It's literally the ceiling of the market. It's right here. It's that ceiling, right? It is where the market is hit over and over and over and over and over and over again. It is the resistance area. Okay, it's a resistance area. This is it. What is the support area? It's literally the opposite. Like I said before, you want to be able to go into market going down or market going up. So if you're going to be going into this down market, you need to understand where the support area is, where the floor of the market is, because it could hit it here many times, and do not predict that it's going to break through, because you don't know what the market is going to do. But what you do know is that you're going to be hitting this area, and who knows when it'll break through, and it could sometimes completely transition. So you need to stay out. These are support areas. You need to understand where and how to monitor it and stay out of it entirely. Okay, and then we do is we put resistance and support areas for the channels. Right, this is how we gauge where those channels, where those consolidating markets are, where those sideways areas are. Okay, it's really, really important to be able to draw these in. Again, you cannot have mental resistance areas, support areas in, because as they say, once you're in a trade, everything is to the left, right? Whatever you are going to be, when you're in a live trade, your adrenaline starts to go pumping. It becomes really stressful, right? So what happens? You want to make sure that everything you have done, you've done your due diligence before you enter that trade. And that happens with the drawing and everything beforehand. Okay, this is you preparing for this. This is so important, guys. Do you really want to be in this ugly, choppy market, putting in your hard-earned money, your retirement money, your Social Security money? Do you want to be doing that? Absolutely not. Why? Because you're going to be eaten alive here. You don't want to go here. Okay, this is important. You need to be able to spot these areas, and they are really easy to do. You just look where the pivots are, you have this drawn in, and that's it. All right, now the real question is, how do you start to spot it in the beginning rather than wait too long? So the way I do that is with, oops, hang on a second here, with reversal areas and divergences. So what are reversal areas? They are double tops, triple tops, double bottoms, triple bottoms, head and shoulders. Okay, this is crucial. This is so important, guys, to be able to spot these, because these, for me, are the most indicative of when the market has lost its strength and when it has very high potential of transitioning to a new trend, because you never want to be on the wrong side of the market. Okay, so what are reversal patterns? Like I just said before, double tops, triple tops. This is what they look like, right? And if you start to notice them, I have had so many people say this has been the biggest game changer for me. And it is done on any instrument, any platform, as long as you're following the price action. It is so strong. Now, I mentioned earlier that I only use two indicators. I use my EMA lines and the MACDs. So I use the MACDs to show me a lot of strength. I find that the MACDs are the least lagging indicator. Excuse me. And it shows me when there is strength and when it's losing strength. And when there's divergence right here, you see how the pivots are going upward, and the divergence here is showing me the exact opposite, that is starting to go downward. I'm seeing that the market is losing its strength. And when it's coupled with reversal patterns, that's when I really know that the market is about to change direction or go into a sideways market. Okay, it is super, super important. And on top of that, I actually use divergences way before they are in the reversal pattern mode. Right here, you see these pivots. I didn't draw it in, but you can see right here, they're going down. But here, my MACDs are flat. It's already giving me a chance to know, hey, you got to slow down because there might be a change happening, and you need to sit and wait until I give you confirmation once it does happen. Okay, that's so important here as well. Now, let's put it all together. Remember, everything that I have just showed you guys is in makingofadaytrader.com. Everything that I have just shown you guys. And you could use this, all these cheat sheets to literally go with this, makingofadaytrader.com. All right, let's put it all together and let's figure out how to spot these breakout trades. So when the market is heading in one direction, all of a sudden you start to get a strong resistance or a support area, and it finally breaks out. That's the breakout. That's when you want to be able to be ready and hop on. This is where you want to see it break through, go here, and then enter. This is what that breakout looks like. All right, you're going in one direction. All of a sudden, there's this massive slowdown, flatness, and then it breaks out and continues in that same direction. These are the most highly probable trades that there are. But if you do not have your resistance areas or support areas drawn in, you are going to miss out on these trades entirely. Okay, so you need to be looking at them, and boom, you want to be ready to hop in when the market is telling you that it is ready. So I use my EMA lines for my entry points. As you can see here, the MACDs, there is a lot of strength from the 0 line all the way here, absolutely no divergence. What I do is I use my EMA lines for my entries. I always have an order waiting or a limit order waiting to enter the market, because you don't ever want to do a market order. Market orders for day trading, it's a killer because you're going to lose so much money on the slippage. So you want to be able to tell the market exactly where you are entering the market. And this is what that looks like right here. Okay. And then I also want to give you another bonus setup look. And again, guys, these could be applied to any market that you are in. Any market that you are working with, you can apply it. So here we have a pretty significant resistance area, and all of a sudden, boom, it breaks through. Look at the strength that we have on these MACDs going in the down. I want to be in on this short with my eyes closed, right? It's the same thing here. Massive area right here, massive resistance area. It's not going any further, and then it breaks through, and boom. This is where I'm entering this market because this is just ideal. Okay, guys, so makingofadaytrader.com, you can get it all here. Now I want to do a little bit of a live analysis with you guys. So as you can see, the volatility has just been unbelievable. This is the market from today. So I personally trade the E-minis, which is the ES minis. And it is the S&P 500 index on the futures market, right? So here you can see, and I personally am on a 6-10 tick chart. I do not use time frames because I find tick charts to be a little bit more reliable. And the best part about a tick chart is, look here. So I use candlesticks and I have a tick counter here. Every single candlestick has 610 in the moment real-time transactions happening right here. So I know what the volatility is. I know the movement. I can see what's going on. And that's the greatest part of it all, right? It's this movement. It's this, you can see what's happening because volume indicators, they are lagging, right? They are not completely on time. If you're sitting at a 5-minute chart and it's super slow, you might not understand why. You have an idea that it's slow, but here you get to see right now in real time what is happening live. And that's the coolest thing of all, right? So you get to see all of this. So here we have a pretty significant moving market going down, right? I mean, this is a trending market. And then look here, this is a very distinguished reversal pattern setting up right here, right? We have this double top that turned into a triple top. And then look here, we have the pivots are straight, but this is totally going side up, right? It's totally inclining up. So this is telling me that there is a very high potential it's going to change direction. And look what happened. Boom, it totally changed direction and now it's heading upward. And now I'm going to be looking for a trade right here. I am always entering at EMA lines, and look at this beautiful, incredible movement right here with the MACDs. So I would be putting in my order waiting right here. So I always will be telling the market where I am going to be entering right here, right? So I like to enter when the purple EMA crosses through the orange, which is right here, making this an ideal trade setup if it goes down to where I have my order waiting, because I will be telling the market where I want to enter that market. And then I move it along with it so that it enters it right here. So we can see how this is working out right here. But look at this amazing move right here. Look at this volatility. It's just going. I mean, it's just gorgeous, right? So this is how I gauge the market. This is how I am setting up the market, ready to enter, ready to go, because it's just beautiful. But you have to understand what it's telling you before you could do that. Otherwise, what will happen? You'll just enter on a really large candlestick because you don't have a system, and boom, you could be totally stopped out, right? So this is how I put in my order waiting. Since we don't have a lot of time, I have to cancel it. I do not get charged any commission if I cancel that order. But this is how I work with the market all the time. Okay, so let's go back here. And let me know if you guys have any questions up to this point. But this is how I gauge the market in the live market. It's fantastic. Okay, guys. So here's the reality. We have everything that we possibly need to take action, right? We have the YouTube channels that we could watch, all the different books, all these different summits and presentations. But at the end of the day, how do you know that you're doing it right? Who are you getting the accountability from? How are you actually knowing that you're doing it right? Other than that you might be winning or losing, but it's inconsistent and it's not all the time. So how do you know you're doing it right? Okay, because all of this is great, but the real question you're probably asking yourself is, how do I even get started correctly? How do I get started correctly? And this isn't only from beginners. A lot of seasoned traders ask me that all the time, like, what can I do to turn this around and be profitable consistently? And a lot of times, most of the time, lacking understanding of the basics is where it begins. Just understanding the basics with the support, resistance area, reversal patterns. These can be done on for any software with price action and understanding it. And that's what makes it beautiful. It's literally like getting into the car, right? Right now, my son is 17 years old and he's learning how to drive a car. So he is learning the basics, right? And without even realizing these basics until he got in, and I'm like, okay, buckle in, put your gear into first gear, press down on the clutch and the brake. Now release the clutch slowly as you release the brake. And he was like, wait a second, where's the clutch? Where's the gears? I don't understand any of this, because he hasn't learned the basics. I've overlooked it. So once he told me that, that's when we got back to the basics. And it's the same thing with trading. And you get people, sometimes you'll have people that have never been in a car and you're like, all right, buckle up, because this is going to save your life. And if you don't know where the safety belt is, how are you going to be able to put in something that could actually save you from losing, from crashing, and just saving you, right? How are you going to understand that? Those are the basics, right? So my own personal sad truth was that I spent over $20,000 on all these different academies when I first began, but nobody was teaching the basics. I was constantly struggling year after year. I was struggling because I overlooked the basics. I was constantly just following other people's strategies, trying to get into a trade that I did not understand at all, chasing trades, revenge trading. I mean, I went through all of that to the point where I literally lost almost $4,000 in 5 minutes. It was one of my lowest points of trading. And after years of constantly failing and not fully understanding what I was doing, but chasing trades, thinking that I had to understand already, I had to do this, I ended up quitting. I just walked away. I could not take it anymore. It was too much for me, for my family. It was just too much, right? But the thing is with trading, and this is the reality, is that we are bit by the trading bug. I can guarantee that majority of you guys right now in this room, you are bit by the trading bug. This is just a reality, right? And why is it? Why are we bit by the trading bug? And it never stops itching. Why is that? Because deep down, we know that we can absolutely do this. We know that we can do this, right? Because we understand that it's not that much. If other people are doing it, we could get it. So what is it? What is the difference with what they're doing and how you can do it? And I realized for me, when I came back after about 4 or 5 months, I came back. First of all, I stripped myself of all the indicators that I had. I also used to have 3 monitors. No joke. I had 3 monitors. I took 2 of them and I just threw them out. I put them out on the curb and let the garbage men do whatever they want. All right. I totally stripped myself and I went back to the basics. I don't know if you guys have ever heard of Coach John Wooden, but he is this legendary coach for he used to coach basketball. He's not around anymore, but he was legendary. He had more accolades than the majority of coaches today still have. And his entire philosophy was when in doubt, get back to the basics. I actually had a student of mine tell me that they're like, do you know who John Wooden is? I'm like, no, I have no idea. They're like, well, your teaching style is really similar. And what he's all about is getting back to the basics. This is him, right? He literally won 88 national championships, NCAAs. I mean, this guy was a legend. He trained and was working with the top basketball performers ever. Yet, every time they started the season, every single time, he would get back to the basics: how to tie your shoe, how to roll up your sock, how to dribble the ball. Because it doesn't matter what you think you know, because if you are going to have a blister or your shoe is going to fall off, you're out. You're out for the rest of the game, if not the season, depending on what happens. So you need to get back to those basics. So today, just for you guys, I have a special offer for participants only. For you guys only, I have a special offer, and it's my introductory course called Bootcamp for Day Trading. You can do this on any apparatus, any platform, any indicator, I mean, any instrument, excuse me, any instruments that you are using. This course is going to help you with all of that. And all of this for
Sorry, Marina, lost the sound for a bit. Mic check. Looks like Marina had lost connection. Let's give a couple of minutes.
Can you guys hear me?
Hey, you back?
Hi, everybody. I'm back. Can you guys hear me? Okay, great. Sorry about that. My lights went off. Okay, so all of what I just showed you guys, all of this is for $97. So before you guys get up, I just want you guys to think of for $97. Everything that I just showed you, you will be learning $97. So really quick question. What can you guys get for $97 that will bring you the same return on investment? Have you guys ever thought of that? Like, what can bring you the same return on investment for $97 one-time fee? So you guys, if you're into golfing, it can maybe buy you, a couple of golf clubs, right? Really good golf clubs. That's pretty much what could get you for $97. Or a really great dinner out with your friends or family, right? Because that's what $97 can buy you today, right? Lots of places and things can give you, but the return on investment that you will get from this course, let me break it down for you for $97. Okay, you could find it all here on bootcampfordaytrading.com. Here's what you guys will get in this course. All that is offered in $97. A prequel framework, understanding your platforms, right? A lot of people are on platforms and they really struggle with even understanding how to use it. There is a tutorial here to simplify all of that for you so that you guys don't have to question it or wonder or anything about that. You are understanding how to set up your charts and getting right into the actual trading process. Then We go over the dissection of the markets, the magic telltale signs, the reversal patterns, the divergences, all of that, understanding that and really, really working with that, because how are you going to be able to utilize it if you don't really understand how to put it into play? Next thing is the defense zone strategies, the support and resistance areas, the divergences, all of this is game changers. And this is all included in this course. All of this understanding, marking it, reading it, and being prepared to watch it. And of course, breakout mastery, the power of the breakouts, spotting those breakouts and knowing when to get in, and also to avoid those fake out breakouts. And those happen quite a lot, but you can completely avoid those fake out breakouts. Okay, understanding where to enter on those breakouts is crucial and is one of the best ways to make money. And you'll have unlimited access to my curriculum. All of this alone is valued at $1,600. Just that part alone is valued at $1,600. Okay, this is all that you will get for that $1,600. And remember, $97. And here's what some of my students say. And I have students from all over the world, because the cool thing about trading is that you can do it from all over the world. So here's what some of my students have said. I just finished the boot camp. Best money ever spent. You are the only mentor that really checks the work and really helps with what you are doing. It is amazing. I am enjoying your boot camp. I am learning every single day. So let me share something really important with you guys. Like I said before, how do you know you're doing it right? How do you know you're doing it right? Who is there to support you, to be with you, to be accountable to? What I am doing also included in this one-time $97 price, 1 month, one-on-one mentorship with me, one-on-one mentorship with me, unlimited feedback for 1 entire month. So you guys get to show me your charts, ask me questions, implement those trades, all of that one-on-one, that is included in this $97 one-time fee. And on top of that, I have a live trade chat room that I personally run, no moderators at all. You will get a free 30 days membership in this live trade chat room, where we sit, watch the market like we just did, entering live trades, talking about it, implementing, and there's an amazing community as well. That is included in that one-time price for $97. This is all valued at $2,600, but for you guys, $97. You could go right here, bootcamp for daytrading.com, bootcamp for daytrading.com, bootcamp to get all of this for $97. Bootcamp for daytrading.com. Okay, guys, bootcamp for daytrading.com. Here's what you guys get for the $97. Everything that is included in the course, everything that we just went over, including the help, the tutorial with 30 days one-on-one mentorship with me, 30 days one-on-one mentorship, coaching, feedback, and on top of that, 30 days live trade chat room with me, live, implementing and being in the live market. All of this for $97. And the reality is, guys, price of one trade. And I know you guys know that. All of this is price less than one trade, all that you'll get there. But the cost of this course is going to bring you back 10 times your return on your investment, 10 times. So when you go and get this course, you'll be able to do 100 of these dinners with your friends for $97. Go here right now, bootcamp for daytrading.com. However, this is the thing. Because of my one-on-one mentorship, I am only able to take on 25 students. I could only really focus and help you guys with only 25 students, because that's where my intention can really help and help you guys so that you guys can prosper and really, really work with me. So I only have spots for 25 people. So go here, bootcamp for daytrading.com, enroll right now, and you can actually start with $59. You could start at $59. Okay, $97 or $59, but even if it's $59, you get everything all at once. So let's go here right now, bootcamp for daytrading.com. And remember, Oops. This is all that you guys will get for $97. Everything that's in the course. The 30 days one-on-one mentorship with me, 30 days in the live chat room with me, $97. It's literally worth less than the price of one trade. Okay. And this will bring you back 10 times your return on investment. And wouldn't it be great to be able to do 100 of these for that one time because you are applying it and making money in the market? So let's do it, guys. Right here, bootcampfordaytrading.com. And thank you everybody so much for coming and joining us today. And I really, really, really appreciate this. Bootcampfordaytrading.com. I hope to see you guys in the course. And thank you everybody for being here today.
Great. Thank you, Marina.
Thanks, Anna. I wasn't sure if it's going to work properly because my lights totally went out and I'm on my phone right now. But okay, thanks everybody again. And I really appreciate you guys coming. And I'm hoping to see you at bootcampfordaytrading.com. And thanks so much again for having me. I really, really appreciated it.